Course route. Copyright disclaimer. Under Section 107 of the Copyright Act 1976, allowance is made for fair use for purposes such as criticism, comment, news reporting, teaching, scholarship, education and research. Fair use is a use permitted by copyright statute that might otherwise be infringing. Welcomes to Chartered Accountant Channel. Today taking about Chapter, Theoretical Framework. Unit 1, Meaning and Scope of Accounting. Video No. 3. Relationship of accounting with other disciplines. Accounting is closely related with several other disciplines, and thus to acquire a good knowledge in accounting one should be conversant with the relevant portions of such disciplines. In many cases they overlap accounting. The accountant should have a working knowledge of the related disciplines so that he can understand such overlapping areas and apply the knowledge of other disciplines in his own work wherever possible, or he can take the expert advice. Accounting and economics. Economics is viewed as a science of rational decision-making about the use of scarce resources. It is concerned with the analysis of efficient use of scarce resources for satisfying human wants. This may be viewed either from the perspective of a single firm or of the country as a whole. Accounting is viewed as a system, which provides data to the users to permit informed judgment and decisions. Some non-accounting data are also relevant for decision-making. Accounting overlaps economics in many respects. It contributed a lot in improving the management decision-making process. But economic theories influenced the development of the decision-making tools used in accounting. However, there exists a wide gulf between economists' and accountants' concepts of income and capital. Accountants got the ideas of value, income, and capital maintenance from economists, but brushed suitably to make them usable in practical circumstances. Accountants developed the valuation, measurement, and decision-making techniques which may owe to the economic theorems for origin, but these are molded in the work environment and suitably tempered with reference to relevance, variability, freedom from bias, timeliness, comparability, reliability, and understandability. An example may be given to explain the nexus between accounting and economics. Economists think that value of an asset is the present value of all future earnings which can be derived from such assets. Now think about a plant whose working life is more than 100 years. How can you estimate future stream of earnings? So accountants developed the workable valuation base, the acquisition cost, i.e., the price paid to acquire the assets. At the macro level, accounting provides the database over which the economic decision models have been developed. Micro-level data arranged by the accounting system is summed up to get macro-level database. Non-overlapping zones of accounting are not negligible. Development of the systems of recording, classifying and summarizing transactions and events, harmonizing the systems by uniform rules and communicating the data is essentially a non-overlapping area of accounting. Accounting and statistics. The use of statistics in accounting can be appreciated better in the context of the nature of accounting records. Accounting information is very precise, it is exact to the last paisa. But, for decision-making purposes such precision is not necessary, and hence, the statistical approximations are sought. In accounts, all values are important individually because they relate to business transactions. As against this, statistics is concerned with the typical value, behavior, or trend over a period of time or the degree of variation over a series of observations. Therefore, wherever a need arises for only broad generalizations or the average of relationships, statistical methods have to be applied in accounting data. Further, in accountancy, the classification of assets and liabilities as well as the heads of income and expenditure has been done as per the needs of financial recording to ascertain financial results of various operations. Other types of classification like the geographical and historical ones and ad hoc classification are done depending on the purpose to make such classification meaningful. Accounting records generally take a short-term view of events and are confined to a year, while statistical analysis is more useful if a longer view is taken for the purpose. For example, to fit the trend line a longer period will be required. However, statistical methods do use past accounting records maintained on a consistent basis. The functional relations showing mathematical relations of one variable with one or more other variables are based on statistical work. These relations are used widely in making cost or price estimates for some estimated future values assigned to the given independent variables. For example, given the functional relation of total cost to the price of an input, the effect of changes in future prices on the cost of production can be calculated. In accountancy, a number of financial and other ratios are based on statistical methods, which help in averaging them over a period of time. Several accounting and financial calculations are based on statistical formulae. Statistical methods are helpful in developing accounting data and in their interpretation. For example, time series and cross-sectional comparison of accounting data is based on statistical techniques. Nowadays, multiple discriminant analysis is popularly used to identify symptoms of sickness of a business firm. Therefore, the study and application of statistical methods would add extra edge to the accounting data. Accounting and mathematics. Double-entry bookkeeping can be converted in algebraic form. In fact, the first known book on this subject was part of a treatise on algebra. The fundamental accounting equation will be discussed in detail under dual aspect concept of this chapter. Knowledge of arithmetic and algebra is a prerequisite for accounting computations and measurements. Calculations of interest and annuity are the examples of such fundamental uses. While computing depreciation, finding out installments in hire purchase and installment payment transactions, calculating amount to be set aside for repayment of loan and replacement of assets, and calculating lease rentals, mathematical techniques are frequently used. Accounting data are also presented in ratio form. With the advent of the computer, mathematics is becoming a vital part of accounting. Instead of writing accounts in traditional fashion, the transactions and events can be recorded in the matrix form, and the rules of matrix algebra can be applied for classifying and summarizing data. Nowadays, statistics and econometric models are largely used for developing decision models for the users of accounts. Also, operations research techniques provide lot of decision models. Since accounting is meant for providing information to the users, to be effective, accounting data should feed the information requirements of such statistical, econometric, and operations research models. Understanding mathematics has become a must to grasp the decision models framed by statisticians, econometrics, and the OR experts. Presently, graphs and charts are being extensively used for communicating accounting information. In addition to statistical knowledge, knowledge in geometry and trigonometry seems to be essential to have a better understanding about the accounting communications system. Accounting and law. An economic entity operates within a legal environment. All transactions with suppliers and customers are governed by the Contract Act, the Sale of Goods Act, the Negotiable Instruments Act, etc. The entity itself is created and controlled by laws. For example, a company is created by the Companies Act and also controlled by Companies Act. Similarly, every country has a set of economic, fiscal, and labor laws. Transactions and events are always guided by laws of the land. Very often the accounting system to be followed has been prescribed by the law. For example, the Companies Act has prescribed the format of financial statements for companies. Banking, insurance, and electric supply undertakings may also have to produce financial statements as prescribed by the respective legislations controlling such entities. However, legal prescription about the accounting system is the product of developments in accounting knowledge. That is to say, legislation about accounting system cannot be enacted unless there is a corresponding development in the accounting discipline. In that way, accounting influences law and is also influenced by law. Accounting and management. Management is a broad occupational field, which comprises many functions and encompasses application of many disciplines including those mentioned above. Accountants are well placed in the management and play a key role in the management team. A large portion of accounting information is prepared for management decision-making. Although management relies on other data sources, accounting data are used as basic source documents. In the management team, an accountant is in a better position to understand and use such data. In other words, since an accountant plays an active role in management, he understands the data requirements. So the accounting system can be molded to serve the management purpose. Limitations of accounting. There are certain misconceptions regarding financial statements. A common man presumes that an income statement shows the correct income or loss of the enterprise and that a balance sheet depicts a perfectly true and fair picture of financial standing of that enterprise. It must be recognized that the accounting as a language has its own limitations. The figures of profit or loss generated by the accounting process are subject to various constraints within which the accounting works. The assumptions and conventions, on which the accounting is based, become the limitations of accounting. The financial statements are never free from subjectivity factor, as these are largely the outcome of personal judgment of the accountant with regard to the adoption of the accounting policies. Following are certain instances. Number 1, the factors which may be relevant in assessing the worth of the enterprise don't find place in the accounts as they cannot be measured in terms of money. The balance sheet cannot reflect the value of certain factors like loyalty and skill of the personnel, which may be the most valuable asset of an enterprise these days. Number 2, balance sheet shows the position of the business on the day of its preparation and not on the future date, while the users of the accounts are interested in knowing the position of the business in the near future and also in long run and not for the past date. Number 3, accounting ignores changes in some money factors like inflation, etc. Number 4, there are occasions when accounting principles conflict with each other. Number 5, certain accounting estimates depend on the sheer personal judgment of the accountant, example provision for doubtful debts, method of depreciation adopted, recording certain expenditure as revenue expenditure or capital expenditure, selection of method of valuation of inventories, and the list is quite long. Number 6, financial statements consider those assets which can be expressed in monetary terms. Human resources, although the very important asset of the enterprise, are not shown in the balance sheet. There is no generally accepted formula for the valuation of human resources in money terms. Number 7, different accounting policies for the treatment of same item adds to the probability of manipulations. Though through various laws and accounting standards, efforts are made to reduce these options to minimum, but certainly could not be reduced to one. In nutshell, it can be said that the language of accounting has certain practical limitations and, therefore, the financial statements should be interpreted carefully, keeping in mind all various factors influencing the true picture. Thank for watching, follow videos and learn more.